make a start. Kia ora koutou, welcome everyone, and thank you for joining us today for the fourth webinar in the Ekos BioCredita series. Ko Josh Lanehauers toko ingoa. I am Josh Lanehauers. I work as a carbon analyst here at Ekos, but on Tuesdays, for the last couple of lunchtimes, I've been guiding you through these webinars. Once again, we are privileged to have both Sean Weaver, our CEO at Ekos, and Helen Hughes, Tai Urungi. She's the Chief Executive of Sanctuary Mountain Maungatautari, here to give us more insight on BioCredita. Now, for those who are new to the topic, BioCredita is a biodiversity credits program developed by Ekos to help fund biodiversity conservation in Aotearoa, New Zealand. I do have a couple of administrative things to share before we proceed. This webinar, like all the previous ones, is being recorded to be made available later on the website and directly to all who have registered. We'll use this familiar format of hearing from Sean and Helen first, expanding on the BioCredita program. This time we'll focus our attention on investors, after which we'll then answer questions from the audience. Remember, you can post questions in the Q&A chat just down the bottom right throughout the session, and you may upvote questions if existing ones resonate with you, and then we'll prioritize answering these. Now, we'll start with you, Sean. A very common misconception is to think of investors and buyers of biodiversity credits as one and the same thing. So addressing this may be a good way to open up the conversation. What are your thoughts, Sean?
Yeah, thanks, Josh. Yeah, I often hear the word investor and buyer used interchangeably in discussions around things like biodiversity credits, and people inviting others to invest in a project by buying credits. So we differentiate between buyers and investors. So the word investor here is not referring to buyers as such. I mean, they're buyers of a product, like people who might be buying goods at the supermarket. The investors are the people who are providing startup capital to enable the producer of, for example, wine or potatoes or some agricultural product. Those agriculturalists need startup capital typically, and that's what investment is for. The buyers help to generate a cash flow, and that cash flow also helps to be used to service debt back to the investors. So in this investor presentation webinar, we're going to focus on this capital raising and capital provision. So what I thought I'd do is just whip through a quick presentation to provide an introduction to the BioCredita program through an investor lens, and then we can have some questions and answers. So I'll just share my screen and let me know if that's coming through. Looks like it is. Okay, so an introduction for investors. So the purpose of BioCredita, a biodiversity credits program, and the enabling infrastructure that it contains is really to create an opportunity for investors to invest directly in nature. So this is not a carbon market. These are not carbon credits. They are biodiversity credits. And each credit represents a unit of measured, reported and verified biodiversity conservation output. So that's really what this is about. Going to the big picture, there's a global biodiversity crisis happening at the moment. We're in the 6th extinction event in world geological history. This one isn't caused by a meteor striking the Yucatan Peninsula in Mexico 65 million years ago. That was the last major extinction event that wiped out the dinosaurs. This is the event that's being caused by humans, and mainly through massive habitat loss. There's a number of global initiatives that are raising this concern. Of course, this concern has been around for a long time, but more recently, the coming Montreal Global Biodiversity Framework is helping us understand what's needed in this space. We've also got the development of environment, social and governance reporting in the corporate world, as well as Task Force for Nature-Related Financial Disclosures. We also have the UN Sustainable Development Goals, of which biodiversity conservation includes life on land, number 15, life underwater, number 14, and also clean water, number 6, can refer to rivers and wetlands. The key take-home message from the current biodiversity crisis is that there's a massive biodiversity financing gap, estimated by the coming Montreal Global Biodiversity Framework to be in the order of $700 to $900 billion annually. Now, this is way too much for taxpayers and philanthropists to afford globally. The same trend is happening here in Aotearoa, New Zealand, where the number of biodiversity conservation initiatives that are necessary in order to prevent extinctions are far greater in financial volume than the amount of grant funding around from taxpayer-supported funding initiatives and from philanthropy. So as a result, it's really important that we also include the private sector in financing this. It's a mathematical and financial certainty that the private sector is necessary here. Now, in order to get the private sector involved in financing an initiative like this or a series of projects and programs for biodiversity conservation, private sector actors need to get what they pay for and get value for money. And this is where measurement and reporting and verification is really important. So measurement to show that the biodiversity conservation outputs are real, they've been measured, then they've been quantified, they've been reported in transparent, publicly visible reporting, and they've been verified by a third party to demonstrate that it's actually all genuinely happening. Now, MRV infrastructure, measurement, reporting and verification infrastructure, tends to include standards, methodologies, validation and verification protocols, registry systems, and ideally pricing transparency, so that when the buyer at the end of the day is buying biodiversity credits, they can trust that the unit price reflects the true cost of delivering these things. Now, standards form the bedrock for the rest of this, and they set the rules for each other part of the puzzle. Also in standards, there's a need for kind of global benchmarks and international guidance systems to make sure that what standard might be developed in a particular country aligns with international good practice. And so this is where we have standards for standards in the biodiversity markets, which is an emerging market just in its infancy. But at this stage in history, there's 3 organisations at least that are helping to form this standards for standards. One is the Biodiversity Credit Alliance. Ekos has been a founding member of this. It's been funded by the United Nations Development Programme, the UNDP. There's also the World Economic Forum and the World Business Council for Sustainable Development that are together helping to form the integrity foundations for biodiversity markets globally. And we've been intimately involved in these developments over the last few years. Of the standards that are out there at the moment and around the world, there's a bunch of them, and there's more of them coming into development each year. One sitting right there in the middle is our one, the Ekos SD standard. The SD stands for Sustainable Development, of which biodiversity is part of that puzzle. So the biodiversity scope of the Ekos SD program is the first program in what will become a range of programs that are using market-based instruments to fund a range of different things. One could be water quality, so that would be BioCredita, the one at the top left. All of these relate to the UN Sustainable Development Goals. So in future, a climate resilience project could be funded through BioCredita. But right now, we're focusing on biodiversity, and BioCredita is the thing that we're talking about today. So BioCredita is a crediting scheme alongside some of those other standards, which are also crediting schemes that I showed you before. And that sits in a broader landscape of the kind of ecosystem of the biodiversity markets, where you have project developers, project developers on the supply side, working with Indigenous peoples and local communities, providing a supply of projects into these crediting schemes, which are then measured, reported and verified by providers of those technologies and capabilities. There's market intermediaries such as traders and retailers. You've got end-use buyers which are consuming these things, and you've got regulators and funders and a range of different entities in that ecosystem. The broad project sequence for BioCredita is that you deliver your conservation outputs, they are reported, they are verified, there's unit issuance, there's unit sales. The unit type that's issued in this program are called SDUs, Sustainable Development Units, and they're the biodiversity scope of SDUs from the BioCredita program. And ultimately, this is a performance-based system for revenue generation for projects. This is all based on our own quality assurance framework, which is the Ekos SD standard. These documents are also available on the Ekos website, by the way. So the Ekos SD standard is the bedrock of the program. We have also validator and verifier criteria to make sure that the validators and verifiers have got appropriate qualifications and accreditations, and projects have to have validated methodologies for the activity that they're undertaking. So the standard has been developed alongside international good practice guidance, and this document on the right is the good practice guidance that we've used in the development of the Ekos SD standard, and in that you'll see the alignment with international standards for standards, as well as our response to the Manaaki Whenua publication. They put out a policy briefing recently, and this also shows how we've solved the problems that the Manaaki Whenua have highlighted. The quality assurance side of it is the validator and verifier protocols, and the validator verifier currently in the Ekos SD program is a company called McHugh & Shaw Limited. They're an independent sustainability assurance provider based in Christchurch, and they were the validator and verifier for the Sanctuary Mountain Maungatautari project, which is the first project in the program. The word validation refers to proposals that are valid to a standard. The word verification means that the monitoring reports have demonstrated that certain activities and deliverables have been delivered and they have been verified. So that's just the difference between those two terms. All projects need to develop a theory of change and show the buyer what their long-term goal is. And rather than go into any detail here, this is just an example where the long-term goal might be a landscape that is where the biodiversity has been restored to something close to the levels in pre-human times, ideally. Although we can't bring extinct species back, we can make the ones that are critically endangered to become much more prevalent in that ecosystem. There's medium-term outcomes that will cause the long-term outcomes, and then there's short-term outcomes that will lead to medium-term outcomes. So it's important for projects to identify this so that they know what they're doing, and somebody who is buying these credits know what they're contributing to. So the buyers are purchasing these short-term outcomes, and that each project has to identify those, and then each one of them needs to identify a set of activities and outputs that will contribute to those short-term outcomes. And this is to create discipline in the project development process so that an investor or a buyer or a third-party stakeholder can look inside the project and see the relationship between the goals of the project and the activities on the ground. Also, all of those activities need to be funded, and that's where they form the basis of a project budget and the project costs, and this helps projects develop the basis of essentially what will be the unit pricing. The project cost structure is the same that you would expect in any venture development. You've got the capital expenditure elements where you're creating your asset. You've got the operating expenditure component, which is operating the project during the project period, which might be 20 years, 30 years, 40 years. And then there's also potentially opportunity costs where a landowner may be giving up certain rights or revenues in order to farm biodiversity instead of beef, and this enables the project to cover those opportunity costs. Our experience over the last 30 years has found that if project financing does not include opportunity cost, then that becomes a massive barrier to uptake for biodiversity conservation on private land, typically because farmers are not farming for fun. They're farming to send their kids to school and to pay their mortgages, and basically as their job and their living. And if biodiversity projects are going to take some of that farm away from production, there's a need to replace that, and this is what the opportunity cost portion addresses. Also inside opportunity costs are things like monitoring, reporting and verification costs, carbon credit monetization, so sales and marketing and fees when you're engaging intermediaries, and also the cost of capital such as debt servicing. All of these costs together enable the project to deliver a verified cost declaration. So the cost declaration is verified annually by the validator and verifier, and that enables a cost-based unit price to be developed. Different projects are going to have a different cost structure, and that cost structure will be reflected in a different unit price. There may be also different unit metrics. So for example, in Sanctuary Mountain Maungatautari, the unit metric is a 1/100th of a hectare. Okay, so that's the unit size. Whereas a project that was looking after a colony of penguins on Otago Peninsula might be per nest rather than per 1/100th of a hectare. So different unit types, different unit sizes, and different unit prices. So there needs to be a constant through this for the market to trust this, and that constant is this verified cost declaration to show that nobody's hiding a massive inefficiency or a super profit or a laziness or anything else inside that conservation budget, so that the buyer can be confident that they're getting what they pay for. The unit price, therefore, reflects the true cost of project delivery, and that includes the cost of sales and marketing effort and the cost of any fees for market intermediaries and any cost of capital. But this is true for any commercial activity. This would be true for wine, it would be true for potatoes or pencils or iPhones or anything you can think of in the market. So it's just using a commercial model for conservation. It means also that financial stakeholders are, well, certainly in the Ekos SD program and the BioCredita form of this Ekos SD program, is that all stakeholders are required to make a profit, because if they don't, then they're going to go out of business. So this includes the capital providers. So of course it's appropriate that capital providers get their return on investment, and it's a financial return. There's no problem with that. We expect this, and essentially we require it. The only thing that we want to safeguard, however, is we want to steer away from people taking super profits that don't reflect super risk. And so super profits might be where somebody inflates the unit price to a very large degree and then uses that inflation to fund an inefficiency like a yacht or something like that. So we're trying to make this yacht proof so that the end users can be confident that they're funding nature and not someone's yacht. Because one of the problems with a market that doesn't have a stable background unit price, a going rate, for example, in the carbon markets, there are going rates for carbon, right? Because carbon is a very relatively simple commodity, whereas biodiversity is very different from project to project, and there isn't able to be a single unit price across the market. So buyers need to be confident that the varying prices that they pay reflect the true cost of delivering that project. The project development cycle involves essentially a short form proposal. A project idea note is the first thing. It's essentially a business case used for capital raising and used to try and get buyers. Then there's the project description, which is the full project business plan, and that's going to take many months to develop and a significant amount of money. Then there's project establishment physically, which might be planting or something like that, and then ongoing project operations. And from the quality assurance side of it, the planning documents are validated to the standard by a third party, and the implementation of the project is routinely verified. The annual deliverables are verified annually, and then the beneficial impacts in the ecosystems are verified 5-yearly. So from a business perspective, this is a summary of what those documents and stages refer to. So a project idea note is a business case. A project description is a detailed management plan and business plan. That's really high resolution due diligence on all of the costs and activities associated in the project, and to help the project get genuinely investment ready. Project establishment is the establishment costs and ongoing maintenance costs. So the way that project idea notes and project descriptions are funded is typically self-funded, ideally for project idea notes. They should only take a few weeks really, and a few $1,000s at most. Project descriptions can cost tens of thousands of dollars and more, even up to $100,000 or even $200,000, depending on the size and complexity of the project and for developing all of that detailed planning. That's ideally funded by grants or investment. So if an investor gets involved in project description funding, that's essentially an element of capital expenditure. Then there's the capital expenditure element of project establishment, which might include planting vegetation. For example, if you're establishing a wetland, you might be doing some engineering to re-wet the area and then doing some planting. And then ongoing project maintenance costs are funded by unit sales, and the unit sales also fund the cost of capital by helping to repay debt. So looking into that process, the project description is validated. So here's an example of the on the left, the Sanctuary Mountain Maungatautari project description on the left, and then the middle document, or the document just to the right of that, is the validation statement by McHugh and Shaw Limited, and that shows that the project actually complies with the standard to every degree. Then through time the project is implemented and it develops monitoring reports, and those monitoring reports get verified. One type of monitoring report is the annual deliverables, so that if Helen's staff say, yes, I went and I killed some possums, then you have to demonstrate that that person actually did that, that they didn't just wave Helen goodbye at the office in the morning and walk into the forest and slip out the back and go to the pub for the day and come back and pretend that she or he had done the work. The deliverables reporting is about proving that you did this work, so that the buyer who is funding these activities is confident that they are funding an efficient, transparently delivered project deliverables. And then through time, the beneficial change in the ecosystem itself needs to be monitored, but that's a 5-yearly process where you create a baseline monitoring scenario at the beginning, and then you do your project monitoring through time. You need to show that the beneficial change in the project is attributed to those activities that the buyer is funding and the investor is supporting, and also the project is able to adapt through time if it needs to. Another key part of the process of transparency is the Ekos SD registry, which is a digital registry built on blockchain technology, built in partnership with a tech company in Denmark called Trusticate, and we spent the last 3 years building this registry and refining it, and now it's live. And in the registry you get each project being registered, the number of units that it's been issued, the number of units that have been retired. Retirement means they've been consumed by an end user. The number of units that have been transferred to a market intermediary, like a trader. In this example, there's been none transferred. There've only been a volume that's been retired, and then there's the volume available left to sell. If you click on the project itself, then you can look into the backstage and see all the validation documents which are available publicly in the registry, and do your due diligence there. All of those documents have got a digital thumbprint in the form of a smart contract and are locked on the blockchain, so that Helen can't come back a year later or 6 months later and then edit the documents and re-upload them and pretend that they were originally like that. That would be a breach of the registry, and it's not possible to do. Then the verification documents are also in there for each vintage of units that are issued. So the biodiversity credits are issued annually in a similar way that wine production is delivered annually. And the verification documents are also there on the public registry, and they are also locked with a smart contract, so they can't be tampered with. And then in the registry you can look, for each project you can look at the transactions that have happened, and this is an example of those transactions. So the transaction type on the left is that they've been retired, which means they've been consumed by the end user. The volume that have been transacted, next column, from Sanctuary Mountain Maungatautari to the particular buyer in question, and the type of buyer, they're an end user, and they can then click on that little arrow there and get an end user certificate. And then the final column is the proof of the retirement on the blockchain, and this is what an end user certificate looks like. It's generated automatically on the registry. It's a digital certificate that can also be downloaded as a PDF. You get on the digital certificate, if you want to put it up on your website as a buyer, it's got the registry link, so you can look backstage on the registry to check all the documentation. It's also got the link to the proof of retirement on the blockchain, and it also shows you which UN Sustainable Development Goals have been delivered in the project. Next steps for the BioCredita program is that we've got Sanctuary Mountain Maungatautari as the first project that's over the line, that's been had its first 2 vintages issued, it's trading, but what we now need to do is move to the next stage and recruit other projects. Now, 2 different pathways. One is where individual projects just choose to use the documentation on the Ekos website to build their project and do it independently. And those projects that do so independently will need investment to support that project development process. The other approach is where we're going to develop an accelerator program, and this will aggregate a group of different projects inside a cluster, and they will able to that creates an opportunity to invest in this cluster as an aggregation. Of course, then the capital required will be bigger and start to be meaningful to capital providers who would rather not do due diligence on a small number, but rather do pay attention only when there's a bigger number involved. And so the project business case will always deliver the anticipated, projected financial performance of the project. And if the project is too small, then of course they can be aggregated into a bigger investment. Of course, in order for these investments to be safeguarded, we need to make sure we can sell these units. So buyer agreements are fundamental to de-risking the investment. Gaining buyer agreements will in turn be dependent on investment in marketing and sales. So like any commercial project, at the development stage of the projects need to get out there and hustle and find buyers, get offtake agreements so that they can de-risk the project development process for them and you as the investor. Again, the purpose of this whole thing is to enable you, the investor, to get an opportunity to invest directly in nature. So I'll pause there and over to you, Josh.
Thank you, Sean. I think that sets the scene quite nicely, actually. Just a quick reminder to put posts through, or I should say questions through from the audience. There's a couple that have come through already. They're really good. So thank you so far, Rob and Don and Mauricio. We'll get to them a little bit later, so hang in there, please. But feel free to keep firing them through, and then we'll have a look at them later on. Now, for the private sector, returns are important in any context. You've already highlighted that, Sean, and although you highlight the ethical guarantees against the super yacht risk phenomenon, just wondering whether you could share how participants can get returns on investment through the BioCredita program, please, Sean.
Sure. So if you're an investor and you want to put money in and get money out with interest or equivalent, then the whole point of the unit price is to fund project operations, which includes servicing the cost of capital. And so just like any other venture, there will be a projected internal rate of return, a projected net present value. So the return on investment indicators will be there at the project idea note stage, the business case stage, and that's when the project is fishing for money to build the whole project. And so investors can have a look at what those projected returns are going to be and then decide whether or not they want to participate in a project. If the investor says, look, I need a 15% internal rate of return before I'm going to pay attention to the project, and the project is only delivering a 10% internal rate of return, then the unit price of the project can be lifted in order to cover that difference, right? Now, the next part of the question the investor might ask, well, sure, you can lift the unit price, but what about the willingness to pay that unit price? So again, this is a brand new market, and this is something that we have to test. The unit price is designed to cover the true cost of delivering this project, and that true cost includes the cost of capital. And as long as that investor is not charging a super profit, then we've got no problem with that 15% if that's what's needed. And if the investor's taking on even more risk, because of course the more the risk the investor takes on, the higher the returns they're going to demand. And we're grown-ups in the financial realism space in this arena, and we know that that's what's necessary. So our job as a program is to create the infrastructure and the quality system to de-risk that investment as much as possible from the sort of project investment readiness perspective, and then it's up to the investor to decide whether they want to take on some risk and support this. But we'll also point out that, unless we as a community, as a nation, as a global community are willing to take on some risk, we're just going to have a farewell party for the world's biodiversity. So if we don't want to have that farewell party, we're going to have to take on some risk. Now, Ekos has put its money where its mouth is. We've carried some risk because we've built this program out of our own pockets, and we're here to roll it out, and we invite investors to do the same.
Thank you, Sean. Now, just wondering whether we can then bring Helen into the conversation. In your particular context, Helen, you weren't, because of the nature of your particular project, and it's been going on for some time, you didn't need to raise capital because the capital was obviously raised in the past. But are you open to traders buying your biodiversity credits and on selling them for margin, for profit?
Yeah, look, Josh, thanks for the question. I think it's important for us, first of all, I mean, we will have capital requirements as we go. You know, we have a $40 million fence sitting there if we were to replace it all today. So at some point, you know, that's going to be a requirement, and we'll look to investors at that point. Right now, if somebody came along and purchased our credits and then wanted to on-sell them, I'm, I suppose, selfishly really interested in that first trade, because that's between us and the buyer. I think then from there, if they're on sale, sold, and there's a secondary market there, that's exciting for me. It actually shows an additional value chain that perhaps when we first kind of came up with the concept of this with Sean, that it really wasn't thought of there. But now we're looking and seeing actually there is a secondary market that could develop. So from my perspective, absolutely go knock yourself out with it. And as long as those first trades keep happening, from my perspective, we're great. Yeah. Sean, I am interested just in a question for you. Is the control though, and that secondary market is going to be a question that people are going to be interested in finding out. You know, you've talked around nobody wants to fund a yacht, and I understand that. So how do you, or do we have control over that secondary market? How do we control it where we can?
Yeah, it's a very good question, and it's a conundrum for any producer. If they want to super control the end use of their product, then they're going to have a hard time. So, for example, when Taylor Swift produces her music and sells it, she can't guarantee that some dickhead is not going to listen to her music while committing a crime. She can't control that. She also can't control the unit price that is charged for her music by people who might have a retail shop in, I don't know, Brixton in the UK. She can't control that. She can control to some degree at least the unit price when she sells it, but beyond that, her ability to control that is lowered. Now, end users in a biodiversity market do want to fund biodiversity conservation and are not particularly interested in funding someone's super profit as an intermediary. So what we do is we do two things. One is we give we can't control the secondary market completely, so we don't aim to. But what we do is give market intermediaries the opportunity to get an ethical trade certificate where they show Ekos what their margins are and show that their margins reflect the risk that they're carrying, and that's an appropriate margin to take. And then they can get an ethical trade certificate because they're showing us that they're not busy funding a yacht. And so, for example, if we were to put units on a trading platform and that trading platform needs to charge a 10% markup, absolutely fine. If they can justify that to us, if we ask them, then they can get an ethical trade certificate, and that ethical trading certificate will give end users confidence that they're not price gouging, and it'll also give projects confidence that they're not being exploited by a market intermediary that's using people's compassionate concern for nature to score a super profit. So, but again, because we're grown-ups in this space, we know we can't fully control the secondary market, and that we need to let the market develop and create some liquidity and some momentum, and also let other market controls kick in. So, for example, if an end user decides that they're being ripped off, then there's things that they can do to challenge that with the market intermediary. So anyway, that's where we're at on those secondary market controls, and we're really looking forward to a secondary market developing. I would love to see biodiversity credits embedded in multiple value chains, and imagine even in the financial markets with asset-backed securities, for example, and blended into, say, mortgages. I mean, in order to get to the kind of scale we need to be able to, and we need to enable the biodiversity credit market to expand into those territories.
Right, thank you, Sean. I'm just wondering whether, Helen, you might want to speak to this idea of kind of biodiversity enrichment. I mean, you sort of touched on that, Sean, around kind of products and services having this embedded. I'm just wondering whether you have a position on that, Helen, or wanted to add something there.
Yeah, look, I have a view, and I suppose prior to working in the role that I am right now, I've spent most of my life working in the banking and insurance industries, and I have looked at this as, okay, if I was a buyer, an end user of the product, what would I do with it? And I think that there is a mindset I have, which is essentially what we've created is the first iPhone. And there's a bunch of people out there that don't understand what iPhones do. And there's a bunch of early adopters that are curious and that want to jump in and actually test the construct. And they're really the people that we're looking for right now to help build what I would call biodiversity enriched products. So if you think around, if you're an energy supplier is a really good example, right? So if you're one of the country's large energy suppliers, you might have a price per unit for electricity, and then you might have a price per unit for biodiversity enriched electricity. So it's a way of bringing to the consumer a connectivity with nature, which right now they don't have. It's going to buy your cup of coffee and paying an extra 5 cents per coffee that goes in towards biodiversity enrichment. It's having a milk product that you buy where you go into the supermarket and it's an extra 5 cents per litre of milk and it's biodiversity enriched. And that means that as a buyer of the credits, you go out, you buy the credits, and you retire those credits once they've been used, and you get to make a decision on when that is. You could buy them and retire them immediately, or you could buy them and retire them every time a litre of milk is sold or every time a kilowatt of energy is consumed. So there's a way to bring this into the consumer market. It isn't, and I'll let Sean talk maybe in a minute quickly around the construct of greenwashing, but this is not greenwashing. This is actually saying that we're looking for like farm to table mindset where people want to understand where their food comes from and the supply chain that goes behind it. This is a similar thing, and it's a way to, I suppose, bring more consumers into your business and show a tangible connection with nature and with biodiversity and how you're investing in that in New Zealand. So I actually think we're at the dawn of a really, really exciting time. I think that if we look, in 2, 3, 4 years' time, I hope that across the country it's really normalised to see everyday items with biodiversity enrichment from Sanctuary Mountain Maungatautari or any of the other projects that are going to jump on board with this program. So it's awesome. We faced launching a few weeks ago. We faced quite a bit of conversation around greenwashing. It's a lovely tag term that's very broad and quite non-specific, but it's obviously something that we want to limit. And Sean, maybe you could talk about how we've approached that.
Yeah, thanks, Helen. Greenwashing is essentially telling lies, and the Ekos BioCredita program has a quality assurance infrastructure that prevent lies from being told by a project. So that's really one of the main purposes of a measurement, reporting and verification system is to demonstrate that the biodiversity conservation outputs have been delivered, measured, reported and verified by an independent third party. One thing worth also sharing is that the BioCredita program are not offsets. These are not biodiversity offsets that are offsetting some biodiversity loss in location A by then creating some biodiversity gain in location B. They're simply nature positive outputs and outcomes. If, for example, a company were to use BioCredita biodiversity credits and claim that they're offsets, well, that would be in breach of the Ekos SD standard, and the watchdog could then make a complaint to the Commerce Commission. They could also make a complaint to Ekos, but the standard that we have developed is a standard for suppliers. It's not a standard for consumers. As a retailer in this space, Ekos also has standards for consumers, and they relate to what kind of environmental claim somebody can make if they're arranging that claim through the Ekos retail platform. And if they are breaching the rules of that those claim standards. So, for example, we have a standard for carbon-related claims, for example, as well as non-carbon sort of impact claims. And there are rules in those claim systems to safeguard against greenwashing, so that if somebody is breaching things from the Ekos retail platform, then we would ask them to do a cease and desist as soon as we become aware of it. But again, this is one of the reasons why we have a Commerce Commission, so that if somebody is telling lies in the market, then the Commerce Commission can make an independent ruling, and that's what I would hope would happen.
Hey, thank you both there, Helen and Sean. I think there's some really fascinating concepts that we're unpacking here. I think particularly the prospect of widespread adoption of biodiversity enriched products and services is really exciting. Kind of embedding nature conservation in such a way in the consumer market is quite a revolutionary, positive way of progressing, and yeah, really exciting. Now, I think probably at this stage it's probably important that we pivot to the audience. A couple of good questions have come through. I know that some people have been using the upvote mechanism as well. So I have a question from Mauricio Siana. And kind of we were talking about greenwashing and integrity in this process, in this mechanism. And I suppose the kind of returning the lens or the mirror on ourselves at Ekos, that's kind of what this question relates to. He's asking, how do you address conflict of interest? And it relates to Ekos, I suppose, in particular, as we participate in the methodology, the registry, the project design, and the monitoring. Wondering if you would be able to speak to that, Sean, in terms of how we how we address that.
A very good question. So the short answer is that Ekos is not a project developer. We don't develop projects. We are the registry and the standard. We can provide advisory support to projects, but we can't develop those projects. So we manage that conflict by simply not being a project developer. This is very similar to the way international carbon standards and the international voluntary carbon market have managed the same conflict. Because if we didn't provide support services for projects, oftentimes projects will find it very difficult to meet the standard and to just learn how to do this. Ekos has worked for a long time with the Plan Vivo Foundation, which is a charitable foundation based in Edinburgh that operates the Plan Vivo standard, which is the world's longest serving community-based forest carbon standard. It's kind of like a fair trade version of forest carbon market activity. And they have found that over the years, many projects have found it really difficult to meet their standard without some kind of guidance. And so the Plan Vivo Foundation have provided that guidance and support, but they can't actually get involved in projects themselves, and that's the same with us.
Great, thank you, Sean. I think that makes it nice and clear, that distinction. Another question from Don Scarlett, and this is around, in terms of conservation, often there's quite a significant input from the volunteer space, and in terms of how that's measured as such. So the question is phrased as such. I'm thinking about many conservation biodiversity projects that have very material volunteer contributions. Can those contributions be included as some of the project costs, say as avoided costs in the Ekos SD methodology?
Sure, I can make a comment on that, and maybe Helen can add some value. But basically, the project has to show the total budget for the project, and that total budget might include activities that are resourced through in-kind contributions, so volunteer activities, for example, but it might also include funding that they've got from grants, but where there's still a significant shortfall in total funding for the project. And so the biodiversity credit unit price and revenue, it's designed to only fund the financial shortfall. And so if a project wants to continue to do voluntary activities, they can. They just show that in their cost declaration. If they want to continue to receive grant funding, they can. If they've got other sources of revenue, they can. They just need to be transparent about that. And one example might be a forest carbon project registered in the emissions trading scheme, where there's some revenue coming in to the project. Maybe it's a landscape restoration project, but there's just not enough carbon revenue to fund something like a deer fence all around that project, as well as maybe some wetland management and really intensive pest and weed control that's much more than just a basic level. The biodiversity benefits are what is additional to the existing funding situation and only funds that additional piece. Okay, so that's how we would deal with that. Helen, anything to add on that?
Yeah, look, if I was to look at the costs that we've incurred over the 2024 fiscal year, we made an operating loss of around $774,000, and that didn't take into account if we were to monetize the cost of our volunteers and their contribution towards the sanctuary. So, I know in the last fiscal year that the number of volunteer hours, if we were to translate that into staff salaries, would equate to just under $500,000 worth of input that volunteers have provided to us. So we don't factor that into our overall cost per unit, if you like. It's just an absorbed cost into the business. We don't on charge that. I think from my perspective, it's not something I would want to on charge. It would feel inauthentic to do so. But we do acknowledge that without the volunteers, the organisation would have incurred another $500,000 worth of overhead through resources and wages. So it's a good question.
Also, if a project were to be double dipping by getting voluntary labour and then charging the unit buyer for that voluntary labour but not passing that value to those volunteers, then that would be a super profit, and it would fail a cost declaration verification activity that has to happen annually in order to issue these units.
Yeah, thanks Helen, thanks Sean for unpacking that for us. I'm now going to move to a question from Rob Schukart, and this is in relation to the interplay between the ETS and the biodiversity credits, and I'll just read his question. While exotic pine forests currently dominate the ETS due to higher carbon sequestration rates, there's a growing recognition of the ecological and other benefits of native forests, and the ETS is evolving to support their inclusion and incentivize their growth. Are there competing incentives here between what we're trying to achieve with biodiversity credits versus the ETS and pivoting more towards inclusion of native species or native forest? Any comments on that?
Yeah, sure.
Sean, possibly Helen as well.
One of the challenges that we face in nature conservation financing in New Zealand is that we've had a market for carbon that we've then tried our best to use as a market for biodiversity, to fund biodiversity. And sometimes that does align. At Ekos, we've developed many projects in the ETS that are nature-based projects. Some of them are native only. Some of them have got some hectares of exotics as well as hectares of natives, and where the exotics fund the natives. And there are many projects around the country where nature did the planting of the native forest for free, and so the capital expenditure cost was very low because there was no capex. And so they already operate in the market. Now, if you want to add value to that, if you want more of that to happen, then a couple of things needs to happen. So native forests, and we know this intimately because we entered the ETS in order to just grow native forests, and we found that we couldn't just do that because they grew slowly, and the cost of establishing them was considerably higher than exotics, which is why we did a blend. But if we wanted to have native-only projects where you're planting native trees with human labour at a reasonable scale where you can't rely on volunteers, then the unit price for the carbon credits, if you were only selling carbon credits, would have to be up around $300 mark per tonne of CO2. Now, the market won't tolerate that. Buyers aren't going to pay $300 a tonne, or some might, a very small number might pay a premium like this, but many won't. And so one option would be to create biodiversity credits to fund the difference between the kind of spot price for NZUs, which is around $60. I can't remember what today's price is, but $60 or $70 or whatever it is. And if you need another $100 or $200 a tonne, possibly create biodiversity credits for that. But also at the end of that, you're still going to find buyers for those biodiversity credits. Remember, they're not carbon credits. These are biodiversity credits, and they're not offsets. And so in theory, yes, that would be great. In practice, we need to go out there and find the buyers for it. And in a way, that's for the market to try out and determine. We're open, this Ekos BioCredita program is open to this blended approach and a project. and it's up to projects to go and prove the additionality, and a unit price that will cover the cost of both the biodiversity portion and the carbon portion. You want to share something
Sean,
on that, Helen?
I was going to say, Sean, I think the other important thing is that within the ETS you can grow a pine forest and you can grow a native forest, but none of that assures biodiversity. And what assures biodiversity are predator control programs. You know, a native forest on its own in New Zealand will attract predators. We know that because we get possums and everything around our fence line every day. It doesn't guarantee a depth of biodiversity. Now, I appreciate the sanctuary here. You know, we are the largest in the world. You know, we're nearly 3,400 hectares of old growth native here. And our biodiversity elements are not just the trees. Obviously, you know, we've got the largest population of western brown kiwi. We are the only mainland site to have kakapo. You know, we have a thriving environment of some of the most critically endangered animals. Now, that's not every biodiversity project in the country. I appreciate that we're quite nuanced in that space, predominantly through our scale. But I do think it's important to go that the ETS will answer a question on carbon to a point, but it will not necessarily blend into biodiversity unless there is active management of predator control programs and it's intentional work. And I think that's what this is funding. It's funding intentional work as opposed to simply planting a tree and letting it grow. So it is a little different, yeah.
Thanks, Helen. Thanks, Sean. I am mindful that we are kind of steaming towards the end of the hour as well, and also really appreciate all the questions coming through. Just trying to evenly split them up with people perhaps who've already asked questions as well. And just to remind you again, any questions we have received throughout these webinars, they will be answered. We will be looking at them, and they will be returned to those people who have attended from right across all the webinars. So just rest assured your question will be heard and answered.
And just on that, by the way, there's from the first few webinars, I've submitted lodged a 30-page question and answer document on the Ekos website for those, and so we will answer each one, which we've done, and for the ones that are coming up today, we will answer them in a similar way. What we'll do is probably update the document that's already on our website, go to the Ekos web homepage, then click on the Learn More About Biodiversity Credits, go on that page, go to Supporting Documents, and you'll find them there. Over to you, Josh.
Great, thanks, Sean. It's turning into a novel, isn't it? 30 pages. Fantastic. Great to have so much engagement. Quick question around kind of the other side. We've talked about the support for the supplier side in terms of investment. A question from someone anonymous. Financial institutions want to play a growing role in supporting nature-based activities. Besides becoming a buyer, I think they probably mean investor, how else could they support this? For instance, investing in the demand side, supporting customers to become demand side, and any infrastructure investment, and what nature positive impacts could they then claim? It's an interesting question.
Sure.
Sean, Helen?
Yeah, well, I think, you know, we're at the, as Helen said, we're at the dawning of a new era of conservation financing, and a market doesn't build itself overnight. There's need for development on the demand side of the market as well as the supply side of the market. What we're doing here is sorting out the supply side of the market, and more projects means more investment to support projects, but the question correctly points out that we need investment on the demand side. So we do need, for a market to flourish, a lot more innovation in things like biodiversity enrichment of goods and services and products across the economy. We need more investment in ESG reporting. New Zealand is an export nation. It relies very heavily on selling stuff to other countries. Many of the markets that we're selling into are increasingly requiring ESG reporting and nature-related financial disclosure type reporting. And so if we want to maintain access to these markets as a nation, we're going to need to meet those kinds of requirements, and that requires innovation on the demand side of the market by building a momentum for a movement where ESG reporting and biodiversity related ESG reporting becomes the new normal. companies can provide leadership in this space by deciding that that's what they're going to do. They're going to get out in front. Government can provide some support in this space by providing indicators to market about the expectations that the nation has of meeting international export requirements in the coming 20, 30 years and getting the nation ready for that and maybe providing some incentives for that. So a range of different things need to happen on that side. Over to you, Helen.
Yeah, look, I think the answer is we're in this space right now where we are new to market, and I think the world is our oyster in many respects. I mean, I look and go, the things I would welcome seeing is financial institutions leaning in to create mortgages that come with a biodiversity enriched element. You know, builders coming out with biodiversity enriched homes. You know, it's that there are products in there, and ultimately, I know that, you know, there'll be people that might go, oh, but what if a mass polluter bought something and came up with a biodiversity enriched product? Ultimately, it is the consumer that makes that decision. So the consumer gets to choose where they want to buy things. What I do know is that there is nowhere in New Zealand right now that I, as a consumer, can buy a biodiversity enriched mortgage or a biodiversity enriched power or milk or whatever it is. And would I buy that? Yes, I would, because one of the things I think is unilateral in New Zealand is most people care quite deeply about the whenua and making sure that we are looking after the country and doing the right thing. So I think there is an opportunity. It really is going to take some early adopters who are prepared to test and make this happen alongside us. And those are the people we're really looking for right now that actually can be bold and be brave and be mavericks and lead the way in how this can happen. Yeah.
Fantastic, Helen, and thank you, Sean, as well. Thank you both for sharing your insights. And thank you, everyone who's joined us, of course, here today. So with this webinar, we conclude our BioCredita launch webinar series. It's quite a mouthful. I think this has provided a very comprehensive overview of the BioCredita program, highlighting its tremendous promise and what's involved at the project manager, buyer, investor level. So thank you for that. I hope you feel informed, those of you who have joined us today, and inspired with what you've learned. If you still have questions, not to worry. As with the previous webinars, as I mentioned before, we will consider all the questions not yet answered, and we will provide the answers on our website and share them with all the participants. So to learn more and get involved, you can visit the Ekos website, look for the homepage, link to biodiversity credits, and learn more about BioCredita and supporting projects like Sanctuary Mountain Maungatautari. So we look forward to seeing you at possible future webinars or engaging somewhere else. Have a great day, everyone. Mā te wā.
Thanks, everyone. Bye-bye.